Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories that we're tracking today. Midcaps outperform larger peers while the market recovers from the day's low, but investors remain cautious on earnings uncertainty. Realty stocks lead the charge.
Precision Camshafts hits a fresh 52-week high after ace investor Vijay Kedia buys a little over 1% stake in the company. Stock gains for a second day, surging 14%.
Just Dial gains and posting good margins. Angel One perks up as revenues per client rise. The TV18 slips as profits crimp on scale-up of new verticals, and Quick Heels falls after sales dip in a seasonally strong quarter.
Avalon Tech sees a muted listing on the exchange's share slide after its market debut. The management tells CNBC-TV18 that they will use proceeds from the IPO for debt reduction and hope to outperform the industry.
Coca-Cola's investment in an associate boosts Jubilant FoodWorks, and hopes of divestment drive up BEML.
Okay, those are the top headlines that we are tracking for you on Midcap Radar. Talking about midcaps, the Midcap Index is the one which is outperforming again today. The index is up 224.7% higher. And the other one which is accompanying the Midcap Index is Bank Nifty. That one too is high by 0.3%. Nifty continues to see some pressure, 38 points down. And that is something that the SGX Nifty was indicating as well. It has seen a fall from the highs, 100 points off the highs since the start of the trading session. And in the last couple of minutes, there is a sharper fall, and this again is led by Bank Nifty. So that is something that you should be tracking, because we have seen that some of these banking names are at the lows, and ITC too is at the day's low as we speak. So yes, a lot of action that we are seeing in the broader market, especially a lot of stocks touching 52-week highs. We'll discuss all the mid-caps on the show today. But so far, at least, Reema, we have seen a second consecutive day of fall for our markets.
Yes, and yesterday the problem was Infosys and HDFC Bank. Today the problem is Reliance Industries. You know, Reliance Industries is such a large heavyweight, 10% weight on the Nifty. So when Reliance Industries falls about 1.5%, it takes down the Nifty by quite a margin. And today is also the financial Nifty expiry, so which brings into the limelight heavyweights like HDFC Bank, ICICI Bank, which typically have moves in the last 1 hour of trade. But the outperformance of the mid-caps is quite staggering. This week so far, while the Nifty is down 0.8%, the mid-cap index has rallied 1.1%. So it's nearly a 2% outperformance that the mid-cap index has clocked in. And in the last few minutes, you're seeing buying in some of these mid-cap banks. So Bandhan Bank, pull up that intraday chart. Yes Bank has surged to an 8% rally. Yes Bank reports numbers on Saturday. But let's take stock of the other mid-caps. This is Midcap Movers. Vivek is here with us. Vivek.
Well, thank you so much for that. As you mentioned, it's this stark outperformance, just actually quite eye-catching as far as the broader end of the market is concerned. Today's certain pockets of the market are doing very well, especially railway stocks today. Most of them are higher in the session, strong buying activity seen here. So names like RVNL, IRFC, IRCON, and even a private company like Titagar Wagons, all of them moving higher in the session on the back of positive railway data that we saw. Some of the other stocks that are moving higher, have a look at this one, Aarti Pharma. It's up for the 8th straight session in a row. Stock continues to do well the last 2 trading weeks. Asian Granito, after a while, up almost 11%. Soba Developers recovering after the sharp knock that this particular name took. And JBM Auto up today, almost 4.5% in the session. Some of the other stocks that are doing quite well, especially when they're talking about volume activity, almost 5 to 7 times the typical 5-day average. Camlin Fine Sciences continues its up move after yesterday's strong move. Aptech as well as ITI doing quite well. On the other hand, some of the stocks that are seeing quite a bit of a sell-off, Quick Heal after the weak quarter, National Fertilizer seeing some profit booking, Gensol Engineering today, the management was on our channel, but the stock is, now locked at the lower circuit, and Anupam Rasayan giving up most of yesterday's gains that it saw in the session.
Okay, so a lot of moving parts in the broader markets, but largely on the higher side. And if you look at the advance decline ratio, it is comfortably in favor of advances as we speak. But let's talk about the broader trends and get a technical check on the markets. And welcome Pritesh Mehta of Yes Securities for just that. Pritesh, good afternoon. Thank you so much for joining us. Well, in last couple of minutes, the selling pressure on Nifty has intensified. It's a 55-point downtick that we have seen. And some of these banking names are leading to the pressure. Reliance Industries too is under pressure today. What are the charts suggesting now?
Yeah, good afternoon. Now, see, prior to yesterday's fall, we have seen a 1,000 points rally on the index. So I think we have reached a zone where we should be consolidating more on the broader markets rather than getting fixated with index heavyweights, because around 7,800 and 18,000 zone is a pressure zone for index. I think from here on, market will not provide index. Nifty will not provide any big moves. It will consume time. Even if you look at our customized breadth, it is tilting on the downside. So I think with price and time correction in the offing in next few days, our focus should be largely on the broader markets. And when I look at something like Midcap index, it is doing well. The ratio of Midcap versus Nifty, it is inching higher. So I think Midcaps will continue to outperform the benchmark index.
Okay, and what about individual stocks? Would you bet on Midcap since that's where the outperformance is?
Yes, that's going to be my focus. So there are two stocks which I want to discuss. First one is AB Capital. Now, see, the stock has been consolidating, a typical bullish consolidation, we can term it as, and now it is trying to break on the upside. Once 166 is taken out, we can see stock going towards 200 levels in next couple of weeks. And second counter is Indian hotels. We have created a customized hotel and restaurant index that is consolidating at the top. And this particular counter, Indian hotel, it's trying to break above the peak of Jan. So once 334 level is taken out, then we can see a 10% move on the upside for this particular counter.
Okay, all right, Pritesh, thank you so much for joining us. So that's a technical check on the markets, which are at the day's low currently. We'll do one thing, slip into a break, and we'll get you more on the markets and stock-specific action because the mid-cap index is buzzing on the higher side today. Stay tuned. Welcome back. Well, the mid-cap side of things are looking good, but Nifty is at the day's low, 65 points lower on that one, and continues to languish from the highs of the day. We have a couple of these names which are at the day's low. ITC, for instance, is seeing cuts of around 0.6%, but that too is an important weight in the Nifty pack. Axis Bank is the other one which is at the day's low. ICICI Bank and SBI. So this fall is largely led by Bank Nifty, which is actually in the red right now. Just a while back, it was up 100 points. So what a fall that we've seen in the Nifty Bank. It's down 14 points as we speak, and these heavyweights are the ones which are putting a lot of pressure on Bank Nifty as well. So see, look at that. It's a sharp fall from the highs just in last couple of minutes for this one. But let's stick to mid-caps now. Schaeffler has posted a decent set of Q1 calendar year 23 numbers. Sonia is here with the analysis. Sonia.
Well, thanks a lot for that. So the numbers are looking pretty good for Schaeffler India. And, you know, if you look at it, the revenue growth has been around 8% on a year-on-year basis at a little under 1,700 odd crores. The profits have gone up about 6% or so. The margins are largely stable. Despite all the volatility, the margins are around 19% compared to 19.7% last year. And on the EBITDA growth side, it's about a 2% gain that we're seeing. But what stands out for me is that there was a presentation the company put out a while back, on what the developments have been over the past couple of quarters. And there are some good wins that the company has seen in the e-mobility segment. Within automotive technologies, they've seen some key wins in passenger vehicles for e-mobility solutions. They've seen business wins for wheel bearings for the passenger vehicle segment as well, and for clutch systems too in the passenger vehicle segment. Also in the automotive aftermarket and in the industrial segment, Schaeffler India has seen some new business wins for some of their recently launched products, which is wipers and center joint supports. They are also continuously focusing on diversification and penetration through range extension. So the numbers this quarter look decent, but there are business wins which the company has seen, especially in spaces like e-mobility, which is fast growing for them.
Thank you very much for that, Sonia. And even the management commentary in the press release does highlight that there are certain external headwinds. They're saying the year-on-year growth rate was aided by our automotive business, helped mitigate external headwinds. As we move ahead into 2023, we remain committed to continue our growth trajectory while taking cognizance of the volatility and challenges in the market environment. So they are ringing in a little bit of caution about the external environment. Need to see how it plays out. But as Sonia pointed out, this quarter has been fairly resilient. Margins too holding up. Let's get to our mid-cap spotlight segment. We go back to Sonia, and she's going to be filling us in on precision camshafts. Sonia, what a big move on this stock.
Oh, absolutely. The stock is at a fresh 52-week high today, and hence it's on our radar. The stock is up 45% in 2023. Now, a lot of interesting developments here. Vijay Kedia, prominent investor Vijay Kedia, has bought a little over 1% stake in the company. Now, the company says that they are one of the largest camshaft manufacturers in the world. Camshafts are basically components that you use in the internal combustion engine of a vehicle. Not just that, they are also present in the electric mobility segment. So what they do is manufacture EV buses, EV trucks and drivelines for the electric vehicle sector. Now, Precision Camshafts has, they supply to a lot of marquee clients like Toyota, Ford, Maruti, Kia, Hyundai, etc. If you look at their earnings in the 9 months of this year, the revenue growth was not bad. It was a 26% growth, but the profits are lower than what they saw in 9 months of FY22. There are a couple of concerns, though. There is no prominent institutional investor, although the promoter holding stands at above 65%. If you look at it, in the last couple of years, the return on equity has been on the lower side for the company. In FY22, the EBITDA and the net profits are still lower than what they saw in the pre-COVID time of FY19. And as I said earlier, FY23 profits are lower than what they saw in the 9 months compared to 9 months of last year. Also, if you look at it, it trades at about 29 times annualized 9 months FY23 EPS. So these are just some concerns. However, the street has looked beyond that and the stock is at a fresh 52-week high. Back to you.
Thank you, Sonia, for explaining that to us. The stock moves in, of course, importantly, putting out all the risks ahead as well. Moving on, Angel One is surging in trade today. We have a lot of earnings which are trickling in. Surbhi Sataria standing by with the analysis on these numbers. Surbhi.
Thanks for that. So Angel One is in focus. That is because of its strong Q4 numbers. Now the Q4 numbers were pretty strong given the volatility in the capital markets. The revenues were up 10% at 826 crores. Their EBITDA was up 20%, and this was largely because of lower employee expenses. Employee expenses were lower by 33% sequentially. The margins came in at 45% versus 41%, and the PAT was up 17%. The average revenue per client, that was also up 3% sequentially at 427 rupees. Looking at some operational data that came in, the total client base was up 10%. The gross client acquisition for Q4 was up 31%. The number of orders, that was up 16% at 26.3 crore orders, and the average daily turnover, that was up 28% at 1.85 lakh crores.
Angel One holding up in the green, though it has come off from the day's high. It's now up 2.5%. At the day's high, the stock was up close to about 6%. A little bit of a come off, as you can see. The high was closer to 11 a.m. So we do stay on. TV18 is also under pressure post numbers. Can you take us through what led to the weakness?
Thanks for that. So TV18 is reacting to its numbers. Now, it's a pretty weak set of numbers. The revenue was down 6%. The EBITDA was down 70% on a year-on-year basis at 77 crores. Margins have come in at 6% versus 17% same time last year. And profits are down 75% at 35 crores. But if you delve deeper into the numbers, the news segment is done pretty decent. The news revenue was up 4% on a year-on-year basis. And the news EBITDA is down only about 12% on a year-on-year basis. The TV news EBITDA on a sequential basis has shown some improvement, and weak ad environment that has impacted the overall profitability. It's the entertainment segment which has dragged down the EBITDA. The entertainment revenue was down 9% at 1,045 crores, but the entertainment EBITDA, that was down 93% at 12 crores versus 180 crores same time last year. Now, the company is continuing to scale up its digital and sports vertical, and because of the investments in these verticals, it is facing EBITDA losses. Key triggers that could work for the stock going forward is the strategic partnership with Reliance, Bodhi and Paramount, which was announced over the weekend. So now they have 15,000 odd crores in their kitty to expand this digital segment. So that could be a key trigger for the stock going forward.
Okay, all right. So that's about TV18 broadcast lower in trade today. The other one on our radar is Quick Heal. A big fall there. Rima, explain to us what really went wrong.
Well, this is a company which provides security solutions against your mobile phone, against your computers. So they have software for that. They cater to the retail people like you and me, and they also cater to enterprises. What the company said is that the enterprises had a sudden decrease in IT spending in the second half of the year gone by, since H2 FY22, which is why the revenues have been weak. So look at the numbers. Revenues are down 26% quarter on quarter. Revenues are down more than 50% on a year-on-year basis. And if you pull up a trend chart, you would see that Q4 is typically the strongest because that's when decisions are being made, budgets are being put. And generally in Q4 of FY22 and Q4 of FY21, revenues were more than 100 crores, which has come down to sub 50 crores this time. As I said, it's the sudden decrease in IT spending since H2 of FY22, which has hurt them. And the company foresees the same trend to continue in the upcoming quarter. It's not just enterprises. Even retail people have brought down their spending. Look at the numbers. Retail spending is down 69% year on year, while enterprise is up 9%. It's lower than what the company was anticipating. That's the reason why they've reported an EBITDA loss of about 16.2 crores. And this is the second consecutive quarter of an EBITDA loss. And at the bottom line too, at the net level, the company has reported a loss of a little more than 6.6 crore. Again, second successive quarter of a loss at the bottom line. Now, annual numbers, just to give you a sense of where this company is headed, the annual numbers for the company are also very disappointing. From FY17 to FY22, the revenues were more than 300 crore rupees. But this time, they've fallen to about 278. So it's come off very, very, sharply, even on an annual basis. And Q4 has been a big drag. And this, comment about IT spending seeing a sudden decline or decrease in H2 FY22 is quite telling. And it perhaps will have ramifications even for the other companies, right? Software companies.
Oh, yes, it will. And that's what we've been talking about, right? So big cut is what we are seeing on Quick Heal and on the markets as well, actually. When we started the show, markets were down around 35 points. Right now, the Nifty is down almost 90 points at the day's low. So a lot of pressure coming in the Nifty pack as well. And Midcap Index also was up around 200 points, is now up just 97. So that's the kind of fall that we've seen in just last 20 minutes since we started the show. So we'll do one thing, we'll slip into a short break and get you more analysis on the markets, what's happening there, and a lot of stocks from the broader markets as well. Stay tuned.
Welcome back. Avalon Technologies makes a muted debut on Dalal Street. Earlier today, we had a chat with the company's chairman, managing director, Kunhamid Bicha, and their chief financial officer, RM Subramaniam, to discuss the growth outlook for the company going ahead. Listen in.
We're looking at it a lot more longer, three-year horizon. What we see immediately is that we will be growing faster than the industry. And since we're just listed, we cannot give the exact numbers out. Our anticipation is going to be faster than industry. We're seeing the orders come in from that. And we intend to keep our 51% and go larger. And the key goal was to give as much as possible as a percentage to the new stakeholders. And that's one of the reasons why the promoters reduced. And some of the other shareholders have reduced much more than what the promoters have done.
In terms of the IPO, and the primary purpose of the IPO is to make sure our growth is fully funded. You all know that the manufacturing sector and EMS is seeing a huge growth momentum because of the industry tailwinds as well. So the idea of the purpose of the IPO is to make sure the growth is fully funded. Bulk of the money will be going in debt reduction. We intend to maintain the working capital lines.
BEML is also trading in the green after the shares of BEML Land Assets Limited will be listed tomorrow. Vivek is here with the details.
Well, absolutely. So BEML Land Assets Limited is a separate company that has been hived off from BEML earlier, and shareholders of BEML got shares of this particular new entity in the ratio of 1:1. So what does this particular company have? This particular company, BEML Land Assets, as the name suggests, holds all of the land bank and around 550 acres of land in Bangalore as well as Mysore. Now, why is BEML trading the green today? Now, the main reason for this particular development is that this particular move clears the path for the government's partial divestment that's being planned in BEML itself. So the government is now looking to sell close to 26% stake in the company via the divestment process. And remember, at the end of the December quarter, the government held a little over 54% stake in the company. Now, remember, the market cap of BEML, as of yesterday's close, was little over 5,050 crore. And when you're talking about the new entity that is expected to list, analysts estimate that the value of the land bank itself is close to 8,400 crore rupees. So now what they're saying is that the estimated value of the land bank per share could come somewhere between 500 to 525, and that is where they expect the listing to actually occur. Now, in October 2022 was when the particular BEML land assets was actually demerged from BEML.
Thank you very much for that. Crystal, numbers up for you on your screen. Looks like a steady performance based on the key numbers. Top line growth of 20.2%, a bottom line jump of nearly 20%. EBITDA is up 15.5%. Prima facie, year on year, it looks to be a fairly stable performance. The stock is down close to about 1%, but it's seen a bit of a pickup in the last 2 minutes as the numbers came trickling in. 20% top line, bottom line growth. Margins have seen a bit of a fall. But at the index level, particularly for the Nifty Bank, there's been a sudden U-turn in the market environment. The Nifty Bank was holding up with a gain of about 200 points, in fact, more than 200 points, and now we're down 100 points. And in the last 10 minutes, there has been a sudden and a very sharp reversal in the banking names. So look at heavyweights. You've got an Axis Bank now down 0.5%. ICICI Bank is lower by 0.5%. HDFC Bank has seen a knock. So across the board, Kotak Mahindra Bank down about 0.25%. So these heavyweights are selling off quite a bit. Pull up State Bank of India in the PSU banking space. State Bank of India too has slipped nearly about 1% from the day's high. So big fall coming through in the banking names. Tata Communications is another one. Keep it on your radar. Comes out with numbers tomorrow. The stock is subdued ahead of its numbers tomorrow. And the worry is that will enterprise clients cut back on some of the spend that they do to Tata Communications as well, a spillover of what we've seen in the case of TCS as well as Infosys. Out of time on Midcap Radar, Mutual Fund Corner when we return.